I help run the dispositions platform for the U.S. investments here for PREI. Our portfolio is probably somewhere around $30 billion and change in the U.S.
Now, is there a change that has gone on over the last couple of years in that sector, should I say?
A change. I think the interesting difference in the last couple of years in particular is the diversity of capital that we're seeing as potential buyers. So, coming out of the GFC, it was hard to try to figure out who your buyers were, who had money, who was willing to take the risk, right? So we wound up seeing a lot of private equity that had cashed out right before the cycle, who were being a little contrarian. They were the first ones back in. The institutions then quickly followed. But now we've got private equity, we've got family office, we've got institutional capital, we've got offshore capital. Some of which you can tell it's offshore, because it does deal with you directly, and a lot of it is being managed and I think advised, let's put it that way, by US-based funds that are working with offshore capital. We just have a huge range of people that we're dealing with, and it's really interesting because even on what you think you can figure out who your buyer pool might be, surprising people pop up. And on every deal, there's someone who I have to go, who are they? We've never run into them before. I've never heard of these people before. Who's done business with them? But there's a lot of money in the market. Everybody knows that. The capital's flowing freely. And then when you match that with low interest rate debt, the buying power is magnificent. And there's not nearly enough product. So for really well-positioned transactions, there's a lot of demand. So we're really busy. We're really active, and the last couple of years has just shown the depth of capital continues to just astound us.
Well, the capital was sitting around waiting for a place to go.
It was.
I think that was the problem, and now that someone said, okay, the door is opened, everybody's going take my money, please.
Well, I think there's some of that, but I think, though, the U.S. is seen as a safe haven. So that's why a lot of offshore capital continues to come here. There's a lot of flight capital, people with money looking to place their capital somewhere other than in their native country because of whatever concerns they have politically or whatever about how they can invest and be protected. I think the continual proof that real estate is a hedge on inflation. It is, while illiquid, it is a relatively safe, in some respects, investment strategy.
As long as you don't have to sell, it is safe.
As long as you don't have to sell without a plan.
Well, that's true.
Okay, I mean.
As long as you get to decide when you sell.
Right, I think that helps.
Where the economy doesn't dictate that to you or other circumstances.
Right.
You can sell and then you can choose when you do it. I think then it's a very safe bet. Eventually, you're going to make money.
And when you think about just the history of this business and the amount of data that's out there now that continues to reinforce how important a real estate investment can be in a diversified portfolio and the acceptance of that, it continues to make what we do appealing.
Oh, absolutely.
And it has made a huge difference in the sort of investors and the sort of activity and just the whole market dynamic.
Well, there was so much that, it's like, what are we going to talk about?
Right.
Just start talking, and then all of a sudden there's plenty
to talk about. Yes.
For more information about our sponsors, click on the highlighted links. If you're interested in becoming a sponsor and having your logo behind me for thousands of people to see, contact me at sponsor@creradio.com or click on the highlighted link.